Welcome back to Market Day Report. I'm Tommy Grisafi, sitting in for my good friend Tony St. James. Well, we have a lot to talk about. We had that USDA report yesterday, and there was no shortage of excitement. Kind of. There was a lot of folks who really thought we could move in the grain markets, but we didn't. Beans traded yesterday right before the report. They were up 15. They traded down 5, came back. Corn was on both sides, so not quite as exciting. But we had news this morning coming in with the cattle market that was interesting. Of course, we have the outside markets to talk about with everything going on with government spending and just day-to-day politics. So let's get into it. Let's look at the corn market. July corn, which is going to expire pretty soon, is trading 4.20 3/4, up a quarter cent. Not a lot of folks trading July like you hear in the old days, unless you really want it delivered to your front yard. Now, they won't bring it to your front yard, but the delivery process is starting to happen. So September corn, 406 1/4, down 2 3/4. Looking at December corn, 422 1/2, down 3. We have March. Look at how the corn market's really starting to build that carry. March corn, 438, down 3, and then May corn, 448. Let's look at the soybean market. We've had some excitement there. Going back to corn real quick, we were a lot lower earlier. I'm not sure if you were watching the show, but we were down 8 cents in corn, so nice to see it only down 3. Soybeans also bouncing. We'll talk July soybeans, 1022, again in that delivery period. August and Sep, which not everyone really trades August and Sep. It's even confusing sometimes why we have those contracts, and someone could explain that. It'd be a long explanation, but some of the things we do at the exchange are kind of old school, and we're not real quick to pull out contracts. But the contract that all eyes are on is November soybeans, 1025 1/4, down 1 3/4. Again, soybeans were down 8 or 9 earlier, so nice to see that bounce. We have some optimism here in the wheat market. Looking at September Board of Trade wheat, up 7 cents. December Board of Trade wheat, 565 1/4, up 5 1/4. March, 583, up 3 3/4. May, 592 3/4, up 3. Again, carry in the wheat market. Let's head over to Kansas City, see what we have going there. A little bit of optimism. Sep, Kansas City, 527 3/4, up 1. December, Kansas City, 551, up 1. Going all the way out to the March and May, we start approaching that $6 level, 585 3/4, up a quarter. Let's see if we can get the spring wheat contract loaded up. Now, folks, if the net change looks unique there, there's been some changes over the weekend. Not sure if you're aware of this, but the spring wheat contract was trading on the CME Group's platform, and we have since changed, so there's some confusion there. And also, the CME has listed a spring wheat contract, so there's 2 spring wheat contracts trading, one CME sponsored and one out of the Miami exchange, and that's another story. But hit me up, DM me, whatever you need to do at AgBull Media, and I could explain it to you. It's creating some confusion, though. September spring wheat, 620, down a half cent. December spring wheat, 647. Let's look at cotton. Cotton in that July, which is expiring, we'll just go right to October. 67.66, down 2. December, 68.39. Interesting over there. Well, I want to talk about the outside markets for just a little bit. We have some strength here in the Dow Jones. See if I can pull that up. Dow Jones is up 300 here. And that's interesting, but you're not seeing that in the Nasdaq. We have some selling in the Nasdaq market. Interesting here. Look at that. Look at that divergence between what the Dow Jones is doing and what the Nasdaq's doing. Will you stay right there? We're going to take a little commercial break, and then we're going to come back and talk cattle, which is another exciting market right here on Market Day Report. Welcome back to Market Day Report. No shortage of volatility here. Exciting times in the cattle industry. If you're not involved in cattle, you should be checking out these prices. If you have friends who are involved in cattle, definitely give them a call. Do a wellness check. We are at record highs. We pulled off that, but yet incredible volatility. Now, there was some news overnight that came out of the USDA. We gapped open lower, and I want to talk about the price action when that happened. I was actually at my office over at Nesvick Trading here in Nashville, and it was quite exciting. By the way, if you're ever in Nashville, come visit us. We're just right up the street. Let's get into live cattle futures here as we dive into these markets. August live cattle, 211, down 280. That's interesting because we've had extreme volatility. October live cattle, 207.75, down 240. December live cattle, 208, down 230. And as you see, like in the grains where we had lower prices up front and carry in the back, it's the opposite in cattle. As you go down the board, you see prices just a little bit lower. But when you get out to December, February, and April, all trading around that 208 level. So we gapped open lower in live cattle, rallied all the way back to the highs, never quite traded up on the day, but we got real close. And then feeder cattle, of course, that's the next one. And that was exciting to say the least. You got to understand, folks, when we're trading at record highs, this can happen. Supplies of cattle are extremely tight, and we had our borders closed down south. We're arguing with Canada on a daily basis. I'm not sure what our relationship is with Canada. It's changing by the minute. Let's look at these prices here. August feeder cattle, 305.47, down $5. Sep feeder, 305.60, down 5. Hock, 303.57, down, let's call it 5 for easy math. November, 301, down 485. Jan feeders, 295, down 4. We gapped open today, down $5, rallied all the way down 250, and then now we're approaching those lows as this news from the USDA. This is, it makes sense why it's happening. When the funds are long, people are long, the energy in the cattle market's up, and then we get that, not quite a black swan, but some news that we didn't know we were going to get. Of course, that news broke after the close. That was digested on the opening print at 8:30 this morning at the CME Group. Let's look at lean hogs here. July lean hogs, 109.55, down 55. August lean hogs, 107.22, down 27. October lean hogs, 92.67. We'll go all the way out to December and February. We're talking about what the price of ham and bacon and all the yummies are going to be around the Christmas season, 83.77. I have to say this, with all this volatility in meats, if you're out there in protein land where you're growing and raising these animals, when that news broke yesterday in live cattle, you still had a chance to do LRP insurance. And so after the close, the markets were closed, the news broke, it's very important that you understand how to do that. Well, that's it for me in cattle and everything else. I hand it back to Tammy.
Yeah, no, Tommy, good to have you here. And I think it's so interesting to see how the markets are reacting. Were you surprised at their reaction from the news of USDA to phase open and reopen the Mexican border?
Nothing surprises me anymore. No, nothing.
Nothing catches you off guard.
You get old enough, you see a bunch, right? You see all types of stuff. So
right,
exciting.
Right. Well, thank you so much for helping us out here.
Thank you.
Always good to have you.